Hello guys, how's it going? So welcome to another video on this mentorship. So today we're going to be talking about market structure, break of structure, and MSS, which is market structure shift. So as we all know, the whole market is all about, like, if you want to your knowledge to go higher on this forex of it, you need to understand market structure, so that you have to know when these movements are happening and the kind of structure the market is forming or is about to form. So, of an uptrend, we all know the structure of the market is called higher low and higher highs. You get it? So, the HH means higher high, when the HL means higher low. So, you see the market making this formation in the market, then you know that the market is forming what they call uptrend. The market is on an uptrend. So, it's making higher highs, higher lows, higher highs, higher lows. The market is pushing to the upside. So, let's see for a downtrend. So in this situation, we have the situation whereby the market is pushing to the downside, which is called a downtrend. You get it? So the downtrend consists of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So you might be wondering, why did I start from market structures? Because I want to explain market structure, shifts, and break of structure. Why am I talking about the market? Trends, and which is the uptrend and downtrend. Because when you understand these trends, you got to be able to understand or catch this, or you understand when the market is about to make a break of structure, or a market structure shift, or a change of character. You get it? You need to understand the market structure properly before you can be able to understand what break of structure is, market structure shift, and a change of character, which is called CHOCH. So let's now dive into what is a market structure shift. So a market structure shift is a situation whereby the candlestick or the market fails to close, maybe break structure to the downside. Take for example, as you can see in this chart, the market is breaking structure to the downside, like the market is on the downtrend. But all of a sudden, the market like fails to do so, like it chooses not to do so, like that area is maybe rejecting the downside. So you see the market failing to close below the last lower low. Are you getting it? The market fails to close below the last lower low. Then you see a buy pressure to the upside, then closing above a lower high. So that lower high, their liquidity resting on that level. So the market reversing and closing above that lower high with full body candlestick is trying to tell you that this market wants to change course. Are you getting it? So whenever you are seeing this in the market, have it in mind that there is a possible reversal. And take note, for this movement to be valid, the candlestick closing above that recent lower high must be full body candlestick. Are you getting it? Full body candlestick leaving behind imbalance, which is fair value gap. So the market failing to close below a lower low or below a higher high, then have it in mind that that market maybe wants to drop to the downside or it wants to push to the upside. So in this situation, the market fails to do so. So that initial movement closing above that previous high is what we call a market structure shift, because the market has failed to close below the lower low and it has closed above the lower high. So that is what they call a market structure shift. So let's now discuss about change of character, which is popularly known as CHOCH. What is a change of character? The market wants to change character, or the market has changed character. Are you getting it? This change of character is not something that happens once. No, it takes a lot of time for this full movement to accumulate. But before it does so, you need to be able to catch it with this. What I'm going to explain in this video. So when you look at this chart, like I explained, that initial closing above the last lower high is called a market structure shift. Then there is that high that closed above that previous high, maybe now create its own high and market drop to the downside, just like you can see. The market drops to the downside and push it up again. That is, there's a more buy pressure and the market start buying one more time, and the market closes with full body candlestick crossing above that high that swept that previous high, that lower high. Are you getting it? There is a high, initial lower high, then there's a market structure shift. That high, there is now a new high causing a higher high. Are you getting it? There's now a new higher high. Instead of having a lower high, we now have a higher high. Then the market drops to the downside, creating what they call higher low. There's a higher low, then the market pushed to the upside, pushing to the upside, closing above the previous higher high. Then we have what they call a change of character. A change of character has already happened in that process. Let me explain one more time. We have an initial market structure shift because the market failed to close below the last candle, that is below the lower low. That high created has already caused a market structure shift. Then the market dropped to the downside, maybe tapping into a fair value gap or a demand, or let me just say higher time frame entry, just like ICT thoughts. And the market pushed to the upside, closing above that previous high. That is what they call a change of character. That market is no longer on the downtrend. The market has changed to an uptrend. So this is vice versa for downtrend and uptrend. So let's now talk about what a break of structure is, which is called BOS. What is a break of structure? A break of structure is a situation whereby the market is making higher highs, higher lows, higher highs, higher lows. So there's a previous higher high and there's a previous higher low. The market is not breaking past that higher lows. And it's not pushing to the downside. No, it is respecting the trend and pushing to the upside. So the market pushing to the upside, closing above that previous higher high, is what they call a break of structure. We have the initial higher high. You see the market causing the first break of structure, pushing to the upside, creating a new higher high. The market dropped to the downside, creating a higher low. Then the market pushed to the upside, taking out that previous high, is what they call a break of structure. This way, it is not causing a market structure shift. It's not doing a change of character. No, the market is already pushing up. The character is uptrend. Are you getting it? But it is breaking structure. It is taking out liquidity on those highs. I have taught you about liquidity and where liquidity levels are. So the market is breaking structure to the upside. It is showing you that the buy pressure is strong. So that is what they call a break of structure. And this same movement is vice versa for a uptrend and downtrend. If the market is breaking past a lower high, lower low, I mean, then have it in mind that the market is breaking structure to the downside, the same way it's breaking structure to the upside. So, like I said, this is vice versa for a downtrend. So, the same way for an uptrend, whereby the situation whereby the market is breaking structure to the downside, instead of breaking structure to the upside, no, it's respecting the downtrend and is pushing to the downside. It's clearly showing you sell pressure that this market is on the sell, on like a downtrend. In this kind of situation, don't start looking for how to buy. No, look for opportunities for you to sell the market since the market is on the downtrend. So this is what you call a break of structure. The market is breaking structure to the downside. Are you getting it? It is not closing above the lower high. No, but instead it is closing down to the downside. That is the lower low. Is breaking structure to the downside. So last on this video is what we're talking about, inducement. Inducement is like a corny movement, like tricking traders out. So when you look at this market very well, you can see everything I talked about: break of structure, market structure shift. First of all, we have a push to the downside. The market created a lower high. Then we have another push to the downside, creating a lower low. Then they will have a new movement, maybe some series of buy pressure, and the market closed above a lower high, showing you a market structure shift. That is a shift in the market structure. The market dropped down to the downside, maybe tapping into a fair value gap. Then most traders will be like, okay, the market wants to start buying and it has reversed. They will enter from here. Then all of a sudden, the market start buying and you are in profit. Then the new movement it does take you guys out, taking both where you place your stop loss, your entry takes you guys out, reversed back, and maybe reversing back, maybe just a short reversal, as maybe that I might have even taken you out of your position. Then you see the market buying with full pressure, moving to your intended direction. So that is what they call inducement, inducing you to like taking you out of the market, then going to your main direction. Maybe you were not clever enough to spot the fair value gap or that block. In most cases, fair value gap, and this fair value gap is in a discount level. So you need to be very watchful of these kinds of movements so that you won't be used as liquidity in these kinds of situation. So you need to understand discount levels and premium level. But all of this I will be explaining later on this mentorship. So thanks for watching.